You see, many of the tactics we've seen employed against members of the military over the years in terms of financial scams have all been motivated by one thing: profits. They want to make as much money as they can. But surprisingly, or maybe not so surprisingly, when you remove the profit motive from the equation, the only thing left is providing quality financial services, and that's what credit unions do through lower interest rates on loans and higher yield on savings. And if that alone is not enough, there are laws that hold credit unions to a higher standard. A perfect example is the interest rate cap. You see, credit unions are the only financial institutions that have an interest rate cap that applies across the board to all their members, whether you're in the military or not, whether you're on active duty or not. These rules apply no matter what. The only financial interest rate cap that exists, the only other one I should say, exists for active duty military, but it only exists for a select few products. Service members on active duty are guaranteed not to pay more than 36% interest rates on payday loans, car title loans, and refund anticipation loans. That's 3 products, and hopefully no one in this room will ever get any of them. Now, by comparison, at a credit union, you can't be charged more than 18% interest on any product they offer. Not on a credit card, not on anything as a result of anything. Some other institutions, maybe they'll give you a great rate. They'll give you 5% on your credit card, and then when you miss the payment or they lose the payment, they jack it up to 30%. But that's not something that you have to worry about at a credit union. I know during the financial crisis, I heard many stories from some of my friends and family members when things weren't going so well and the economy took a little bit of a dip, and some other financial institutions needed to come up with a way to raise some more revenue. They needed to protect themselves a little bit more just in case they lost some more money. And as a result, people saw their interest rates jump up into the 30s. In terms of percentage for no apparent reason. They didn't miss a payment. Their credit score didn't go down. Nothing happened except for the institution that they were banking with decided that they needed to make more money. Now, that, like I said, that's not something you have to worry about at a credit union. And at credit unions, not only do they not, but by law, they cannot charge loan prepayment penalties. Loan prepayment penalties are the trick that trap people into bad financial products. They get you to sign up before you can read everything through and understand everything, and then there's a prepayment penalty. So if you find something better down the road, you can't take advantage of that without paying some massive fee that would pretty much bury whatever benefits you got from moving it in the first place. See, they trap you with these large loan prepayment penalties. Now, like I said, credit unions, they don't offer predatory products in the first place. But if you ever find a better rate than your credit union can provide, or you want to pay off your loan at a faster rate so that you pay less total interest in the end, you're not going to be penalized for that.